So yesterday, Kelvin had asked the question, and today was such a beautiful example in regards to what Kelvin had asked yesterday, which is gathering the daily bias in between two dark pools, right? So I want to show you all today how I was able to capitalize on two bullish moves during the New York session. These were my two positions today. I had pulled profit from this position. I'm not floating in this anymore. Once we started to consolidate in this area, I was kind of just getting tired of holding the trade after we had stalled out at the 35.6. All right. So these were the two bullish positions today. I want to talk about how operating in no man's land and being able to determine whether price was bullish or bearish in between two dark pools. We can just utilize some of the basic concepts that I teach in the CYPRX 2.0 content to gather those insights. So starting from the top down on the hourly time frame, number one, all right. First off, we are trading above a dark pool at the 29,674, which we can see from the market open after Asia session. So we can see the market open is right here in this area. And then Asia session had a nice sell off, and we came down into this demand area where we can see clear buyer intent. If we were to turn on order flow charts, we would most likely see large buy volume in these bullish candlesticks. And we can see that that buy volume was defended by buyers after sellers got trapped at the dark pool and buyers became aggressive again during the Asia session, whether it was sellers taking profit or whether it was passive buyers defending this previous area where they were aggressive at. Nonetheless, we created a daily low heading into today's price action. So on the hourly time frame, this was the daily low. That daily low came in above a previous higher low. So now the market is starting to make, in terms of daily price action, higher lows, higher highs. New day's candlestick starts here in this area during Asia session. Asia session sold off into a discount. Buyers defended that area, and then we started to trade into London session. London session here in this area did the same thing. They discounted price, albeit it wasn't a substantial discount, and they liquidated internal liquidity on the lower time frames. And before price action rolled over into New York session, you can see this is roughly about 6 to 7 a.m. After liquidating internal liquidity, we broke back above the moving average, and we are creating new structural highs. All right. So overall, we are starting to print bullish order flow above a shadow dark pool, because I think after the update, this dark pool had disappeared, but it was a dark pool nonetheless from last week at the 29,674. So on the hourly time frame, we had that to analyze coming into the New York session. Price action is respecting a previous demand zone where we had a down move before an up break of previous bearish structure over to the left-hand side that violated the 50 EMA on the hourly. Coming into the new day's worth of price action, we liquidated internal liquidity, created a higher low, higher high, higher low, higher high formation from Asia to London. So that's just basic structure. Now, what I mentioned to you guys yesterday is trading in between two dark pools in the directional bias of the EMAs. So coming into this New York session on the hourly time frame, not only are we printing bullish order flow, but we are also trading above a triple moving average crossover. So this was the 8:30 a.m. candlestick, or the 8 a.m. candlestick before the 8:30 a.m. open. And so we can see that not only was price printing bullish order flow above a previous dark pool, respecting previous bases on the hourly, but we were also trading above the triple moving average. So that means with the logical mindset in place, if we are going to be sellers today, then what do we need to see? Considering that right now, price is telling us that the path of least resistance is in favor of buyers. We would need to see a couple of different things. Number one, before anticipating or possibly taking sells, the first thesis would be for price to be trading at a premium on the higher time frame, at a previous hourly area of interest where buyers were trapped and sellers became aggressive, pushing price into new structural territory. That's number one. Number two, if we're not going to sell from a premium, would be a break of previous bullish order flow and for price to trade both beneath EMAs, beneath previous bullish higher lows, and beneath a dark pool. So if we were going to sell today and price wasn't trading at a premium, the only other option for sells, or that price action would lead to justification of sells, would be a break of London session lows, number one, and then bearish price action beneath the EMA, starting to see an EMA crossover, and preferably a break back beneath previous higher lows from the daily candlestick low and price trading beneath the dark pool. And once we get that confirmation, then we can start to look for premium areas to take shorts from. And those would have been the only two trade ideas today for sells, right? Because we weren't printing any bearish order flow today at all whatsoever. So to justify sells today, we would have needed to break previous bullish structure, trade beneath an EMA, preferably break below a dark pool, retest premium that led to the break of the dark pool to then start to look for the possibility to execute sell positions. That would have been scenario number one for sells today, right? Scenario number two would be if price came up into a premium, if sellers make some formal attempt to defend previous areas where they were previously passive, trapping buyers and then becoming aggressive, pushing price into new lows, that could also open up the door for possible sell territory, which obviously, of course, we're not there yet, right? So that means today the path of least resistance was buys. Hopefully, I'm not losing anybody up to this point so far. All right. So coming into the New York session, that was my hourly bias. I was bullish based off of everything that I've shown you all now up to this point, which now can take us down to the 15-minute time frame. So think about everything I just showed you all on the hourly. Now we're going to look at what the 15-minute was telling us coming into the New York session. So now you can see my 15-minute AOIs. My 15-minute AOIs, this was the London, this was the Asia session low. We can determine that by simply just turning on the session indicators. You can see Asia session, highlighting the last down move before the up structure started or the bullish order flow started rolling over into London. Just simply highlighting that last down candle all the way to the wick and extending that over to the right-hand side. That was my Asia session area of interest. Coming into now London session, you can see same internal liquidity sweep that then leads to new higher low, higher high formation. This was London session's low. So simply all I did on the 15-minute, same as I did for Asia session, I simply highlighted the last down move all the way to the wick and extended that over to the right-hand side. And these became my two AOIs today on the 15-minute to say, okay, as long as price is trading above these two AOIs on the 15-minute, I'm going to be a buyer because the path of least resistance from the hourly down now to the 15-minute is telling me that as long as buyers are in control, we're likely to come up into the next dark pool at the 39.9, right? So 15-minute AOIs, we can go ahead and we can get rid of the session indicators. So now this is where New York session started. Here is the 8:30 a.m. open candlestick right at this bearish candle. And so sure enough, right at the open, it presented a beautiful delta held formation. You can see that delta held or a continuation pattern, keeping in mind, again, the question yesterday that Kelvin asked is how to trade in between two dark pools when you're in no man's land. So think about it. The daily low is here, or Asia sessions lows are here. Remember that we respected a previous daily low or area where buyers were previously aggressive, trapping sellers at a dark pool and becoming aggressive and pushing price into new structural territory. During the Asia session, we respected that area of demand. And buyers started to print bullish order flow, higher highs, higher lows, higher highs, higher lows. On the 15-minute now, because remember on the hourly time frame, what were we trading above? We were trading above the triple EMA in between two dark pools. Now we can see on the 15-minute prior to the session open at 8:30, where was price action? It was above not only previous areas of demand, not only above dark pools, but it was also above the EMAs. Right? So again, until this bullish structure is broken, until price is trading beneath the EMAs on both the 15-minute and the hourly, and preferably beneath a previous dark pool that acted as resistance, now acting as support, we are in bullish territory, right? So after price at the open came down into the London session lows, liquidated the low, taking out internal liquidity, gathering momentum to then reverse price and take it higher. After we came down into the London session lows, I started to drop down to the seconds chart because just like how on the 15 minute, we are starting to see delta held patterns where we can see a one or a sweep of internal liquidity that then leads to a higher low, higher high formation, breaking previous bearish structure and popping back above the 50 EMA. So now we're in a one and a two or a new bullish structure formation. All that was left for me to do after dropping down back when price came into the London session lows or the three was to jump down to the lower time frame and see the same pattern. So once we go down to the lower time frame in this area, we want to see the same thing. We want to see previous bearish structure or price coming down into our AOI. We want to see a bullish reaction that breaks at least two previous bearish structures, which then gives us our new one, two, where we can take our fib from the low of the one to the high of the two to wait for a pullback or a retest of previous resistance, or the base to capitalize on a good risk to reward trade, to take buy continuations to target previous sellers or highs, right? So this is the 15-minute structure. Let's now jump down to this area of interest at the session open on the second chart and see what we can see. Keeping in mind from the top down, hourly, we're bullish. 15-minute now, we're clearly bullish. And giving you guys parameters as to what to see before we can flip our bullish bias to a bearish bias. All right. So now we jump down to the second chart. Okay. So this is our previous 15-minute structure leg. Here's the London session low on the 15-minute. That took us up into the new structure high. We're now on the 15-second chart. Here is that London session low area of interest from the 15-minute. So you can see the reaction when we come down to the second chart that we had at the session open. So here is the 8:30 a.m. open. We wick beneath the London session low very briefly, and instantly following the wick, what do we see? A huge absorption wick that signals to us that sellers got trapped. Buyers then pushed price and aggressively broke all this previous bearish order flow, which gave us a new structural leg on the lower time frame, keeping in mind that we're also operating at a 15-minute base, right? So now this became our new base from A. For me personally, I wanted some better confirmation, so I waited patiently for another higher high, higher low formation. So after price came back and respected the base here from this initial bullish move on the second chart, I waited for another bullish leg or another one and another two confirmation structural formation before I looked to enter to make sure that I was gathering enough confirmation to get in and capitalize on the move and not guessing that this is going to be a reversal. So once price pulled back into this base from A to B, I waited for the same exact confluences. I wanted to see two previous bearish structures broken, and I wanted to see a new bullish leg created. And so on the 15-second chart, we can see that once we pull back into the base from this one, which is the base from the 15-minute structure, you can see that this now new bullish leg from the higher low to the new high starts to print the CYPRX confluences that we look for entry criteria, which is a break above two previous bearish structures. Here's the first break. Here's the second break. And a break above the 50 EMA. That then gives us confirmation to justify this as our new bullish leg from A to B, considering that we are reacting from a 15-minute base inside of a new bullish A to B move, right? All that was left for me to do was trail the next pullback with buy stops. So sure enough, after every single one of these bearish candlestick closes, I simply just trailed each bearish candlestick with a buy stop. My last buy stop was executed right above this bearish candle with this bullish wick. I simply took my stop loss nice and tight beneath the low after that trade was executed, and almost instantly within about 30 seconds, the trade was in profit. We broke back above the 50 EMA, started printing higher lows, higher highs, breaking previous resistances, turning those resistances into support. And then we came up into the Asia session highs from where Asia session had started taking profit during their session. And I closed the trade at the Asia session high here, almost spot on. So that was it for the first position. Very clean, sound delta held formations at the beginning of the session from top down. Hourly was bullish, 15-minute was bullish. Then at the New York session open, jumping down to the seconds chart, we can see the bullish reaction and the delta held pattern, or the one that swept lows, made new structure bullish highs, having now a bullish reaction from the one, waiting for more bullish confirmation by seeing a new bullish leg or a break of two previous bearish structures. I then saw this as the new bullish leg, waited for price to respect the base or come down and target internal liquidity, trailing these bearish price action candlesticks with buy stops. Once that buy stop was activated, stop loss nice and tight. A safe stop would have been beneath this low, and I simply just targeted previous higher time frame session areas of interest, which were Asia session highs. So that was the first trade. Going into the second scalp position, it was literally just identifying continuation moves. So highlighting bases, I highlighted the last down move, which is here, before the up move that led to this break in structure, which gave me my new range from A to B. This was my first area where I said if price is going to pull back and continue to buy, then this is the first area where they're likely going to do it from. Now, I wasn't just highlighting this as an AOI, I was also highlighting here as a possible area where price could react to, and highlighting this last base, saying to myself that these are now my three areas of interest, 1, 2, and 3, where if price is going to continue higher, these are likely the three areas where price is going to react from. And now, as a risk taker, I have to be willing where if I'm going to continue to expose my capital after already having a winning trade, to get the best risk to reward and wait for the best confirmation. So sure enough, same thing that I did before executing the trade here in this area, waiting for that confirmation, I waited for a new bullish structure to form before I executed my trade. So I did not enter on this initial retest of the first base, which was here in this area. I waited for confirmation. So I waited for buy volume to come in and break two previous bearish structures. So here you can see the initial reaction here did not break previous bearish structure. So it wasn't until here where you can see bearish structures formed. Here's a lower high in comparison to the previous one, lower low, lower high, lower low formation. I said, okay, cool. Now we have clean structure. I want to see buyers engulf these two previous lower highs and break above the 50 EMA, showing me that buyers are still in control and are defending this base. So sure enough, with the next bullish reaction, we got the CYPRX confluences, a break of two previous bearish structures after having a bullish reaction from a previous base that took out the 50 EMA, which then gave me that confirmation to say, okay, great. Now we're operating in this new A to B range. So simply once we started to pull back, I trailed this bearish price action just like I did with this market order here. Same thing, once we pulled back into the base, trailing this bearish price action with buy stops. My last buy stop was above this bearish candle. This bullish candle executed that buy stop. Stop loss was originally beneath the wick low. After price crossed back above the EMAs, because I was already up for the day, I went ahead and I moved my trade into entry after we started to create price action above the EMAs. And I simply took this trade out in the Discord. I mentioned to you guys that after we broke the 15-minute structure from Asia session highs, I started taking profit from this trade, and I let one runner go into the 35.6, which was my overall bullish target from this morning's breakdown that I gave you guys in the Discord at 8:49 a.m. So about 10 minutes after the open, I mentioned to you guys if sellers can give up the 29,970, that the dark pool to the upside is the next target between the 35.6 and the 39.9. Right? So very clean structure today. I think that Kelvin's question yesterday about asking how to analyze price action and not get mixed up in between two dark pools. Today's price action was a really great opportunity for you to practice what we talked about yesterday on the Zoom call about using the EMAs, making sure that you're trading in tandem with structure in between the dark pools and not guessing the directional bias and allowing the market to tell you what it wants to do. All right. So that was my breakdown for today at two buy scalps. Very clean trading session, very minimum drawdown, trading in tandem with the higher time frame and waiting to execute price action entries upon the confirmation on the lower time frames. Right. Any questions from today's trade breakdown? Did anybody have any trades that they want to go over or bring to the table, or questions that they want to ask? I'll obviously, of course, love to hear your guys' perspective or breakdowns if you have anything.